Welcome to RenMac Off Script. We're able to discuss markets, economics, policy, history, and life. The 23rd of August, 2024. I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pavlik.
As a reminder, all the charts that we reference are posted on our Twitter account at RenMac LLC and our LinkedIn account. We're going to hit on Jackson Hole, this little jobs data reset, if you will. Talk about price controls a little bit, what happened to the DNC, some of the internal characteristics of this market, and the difference between a balance sheet and an income growth recession or slowdown. Let's start with you since it's so topical, Mr. Pavlik. DNC, I got to say, they throw a pretty good party. I mean, it looked like it. I know it's all manufactured. I know it's all BS, and it's true on both sides. But it certainly looked a little bit more engaging and fun and lively. Like maybe you'd actually want to drink a beer there in the stadium versus the RNC. What was your takeaway on the whole thing as we settle in now for the meat and potato side of this race?
I think it went as expected. I mean, to your point, using a lot of celebrity to draw eyeballs and attention there. It was very short on substance. And again, that's probably feeds into this broader theme of, this hide and Harris strategy. I think her support and the energy there wasn't probably necessarily for who she is, but who she isn't, because we don't know who she is. We still don't have a lot of policy proposals. Who she isn't is Joe Biden, who, if you saw him speak deliberately around midnight on Monday, I say deliberately because ordinarily you wouldn't have a former vice president speaking on Monday. You would ensure that the convention was running on time to make sure that he wasn't speaking after most people have gone to bed. I think that wasn't by an accident. And she's not Donald Trump, who is who he is in terms of a polarized view. And whether or not just not being Biden or Trump is enough to win the election, I think is going to be tested, because we'll find out next week if she actually gives an interview. If she does, I suspect it's going to be to a very sympathetic media outlet. So I don't anticipate getting much more in terms of specifics where she is on policy. And I think that's going to put more pressure on the September 10th debate with her and Trump. That's going to be, I think, take on outsized interest and significance, because that's when I think she's going to be forced to defend for the first time why she changed all these policy positions from where she was in 2020. Whether Trump can articulate that and sort of make that case remains to be seen. But one thing I think that Trump has going in his favor heading into that debate is, at this point, he's done a few of these. Harris hasn't. You can sit there and do all the practice. I mean, I know we talk about we're in football season now, practice heroes, but going out there and actually executing when you have that adrenaline and that pressure on you is a different matter. And, despite all this attempts, I think, from the media to sort of rewrite the 2020 Democratic primary, I don't recall her being a very effective debater, aside from when she called Biden a racist. That was sort of the highlight of her campaign, and it quickly fizzled out after that. So I think there's still a lot that remains to be seen.
Yeah, when you go to a festival, whatever, a large concert, the weakest act is always the opening act, right? So the idea that they put Biden on Monday, I mean, what a slap in the face.
Well,
I mean, it's hard to imagine the guy's still president. I mean, that's how.
Oh, they did him dirty. They did him dirty. But I mean, Steve, your point that she's going to. I mean, you're a bit redundant there, I must point out, when you said that her first interview would be with a sympathetic media outlet.
Yeah,
you could just say media outlet. The sympathetic is already implied in that.
Yeah, no, I think that's probably apparent at this point. And
do
look,
they even understand how shameless and like they look? I mean, it's sort of. I saw some reporters on like allegedly neutral outlets talking about how this was the best speech they've ever seen. It's sort of like shades of like Chris Matthews was like chills up my legs. I mean, come on. Likening this to Obama when Obama took out the Clintons and, had a primetime speaking slot in the 2004 DNC convention, right? I mean, it was, I think it's a bit, it's just unbelievably disingenuous. And I think it's sort of one of these things where it's like, do you hear yourself? I mean, you're supposed to be trying to call balls and strikes. You're clearly not doing that.
The number of people in this country, and I think it's just human nature, right, that respond to the emotion of this is a little frightening. I mean, and you kind of want somebody who can do both. I get that Trump doesn't do that at all, but the whole like just sweep me off my feet and good things will happen really is disturbing. I want to just hit on something that kind of bridges that gap, which is something that she's been in favor of, or at least has come down on. And I'm sure people are going to say, no, she's not, but she's on the record saying this, that she believes in price controls around price gouging. And look, you don't have to go to an esteemed university or read the literature of Baum-Bauwerk and some of these other very esoteric economists to understand what the dangers of price controls are. Neil, why don't you just hit on that real quickly? Just, I know that we have a very sophisticated audience and they're economically literate, but just how dangerous is that? The idea of
Not
price
dangerous at
control.
all, Jeff. 16 Nobel Prize winning economists tell me it's not.
There it is. There it is.
No big deal. I do think it's
Stamp
kind
of
of
approval.
hysterical how whenever if she comes up with something that's sort of out there that is sort of widely panned by across the spectrum, the media's first inclination is to say, well, don't worry about it because the Republicans will control the Senate. Like, how smug and ridiculous is that? So we're supposed to ignore the things that are coming out of our mouth on the expectation that they won't flip the Senate. It's unreal, the gaslighting. As you know, price controls are not good because if you set the price of something below what's clearing, that's how you create shortages, okay?
Yep.
I will say in their defense, not that I would defend price controls, it's unclear what exactly she's talking about because there are already anti-gouging laws on the books. So what are you really talking about? This is like the classic kind of, debate between the two sides. I mean, you have one side that is more about regulating industry, right? And you have another side that's not, right? I mean, and we know that when he was president before, Trump, made this big deal about, what was it, like cutting for every new regulation, we cut two or something like that. That was probably gimmicky also, but at the same time, this is it's sort of the broader kind of ideological framing of the two sides in the American political system. If you want to, one natural sort of logical endpoint of wanting to regulate industry is price controls. And I do think that, look, like I said, the people that would normally light their hair on fire if Trump went and said something like that will be very willing to turn the other cheek. I did appreciate the Washington Post op-ed from Catherine Rambel about if you don't want to be called a communist, don't go and talk about price control. So
Yeah.
kudos to her.
I was just going to add from a political perspective. I thought it was interesting that she proposed it in the lack of specifics because, if you have to define what you mean by it, and calling on Congress, as Neil sort of alluded to, suggests that you're not serious about following through. So why did you put it out there? You put it out there because the fundamentals, you put it out there because the fundamentals don't favor you. Because if you look at the top concerns of voters, it's still the economy, inflation, and immigration. And clearly, she feels vulnerable to being linked to Bidenomics and all the voter frustration over inflation. So rather than admit that all this social spending contributed to inflation, it's easier to sort of blame, as they were doing, greedy corporations for this, which is sort of interesting to me because we've seen these evolving positions with respect to inflation. First, it didn't exist, then it was transitory, then it was caused by Putin invading Russia, then sort of it's a global phenomenon, and now we're sort of settling on greedy corporations, which I think
it plays so well though. People are so there's look, as long as you have competition, and by competition you mean basically 3+ players, right? Unless there's collusion, it's very, very difficult to make that work. Look, as a guy who's had to make payroll for 15 years, right, in this business, I can tell you, like, it all kind of settles out at about the right level.
I guess the thing
the
though,
visible hand is amazing how accurate the visible hand is.
Right. I guess the thing I would say is that how effective is it politically for Trump to just go out and be calling her like a Marxist, a communist? These are not things that resonate with the electorate today because the Cold War I mean, not that you'd know it based on the rhetoric around Russia, but you know, the sort of ideological debate between like democratic capitalism and, you know, communism, I mean, that's long over. I mean, so people, I mean, calling her a communist, I mean, a new voter like looks at that and it's like, okay, like what does that mean? But I mean, I think I remember, you know, when I was like doing, you know, like in your old like social studies courses, you're like studying previous elections, presidential cycles. I really love the old Dwight Eisenhower, you know, sort of ads where I think it was called like Eisenhower Answers America. And basically all he said, he's like, so what do you get? So it would basically be like a citizen, a regular citizen asking him a question and him answering the question. That would be the ad, right? And the ad went something like, what are you going to do to bring prices down? I mean, now I think this was like after, like in the post World War era. So there was like there was an inflation problem, like supply shocks and things like that as people came back from the war, and it was the early 1950s, and so or whatever, and so it was something like, what are you going to do to bring prices down? That was the question. And his response was, instead of asking me what I'm going to do to bring prices down, why don't you ask yourself who put them up in the first place, and then vote for a change. And I think that to me is such a more effective way of doing this than calling them a raging communist, which I find hysterical. but also, I mean, what's more effective, right? I mean, because most people don't understand what that means. I mean, obviously it means government ownership over the means of production, and it's a terrible way to organize an economy. But, you know, I mean,
Yeah.
the sort of pejorative, like commie, like, I mean, that works for me, but doesn't work for a lot of others, you know? And so I just think if you go back and look historically, just a little bit of political advice for the Trump campaign.
If the marginal voter is being swept off their feet by Beyonce, the marginal voter is not right. The communist label is not going to work.
Right. I mean, that's why I say instead of asking how I'm going to bring prices down, you can just say like, well, who presided over a big jump in prices in the first place? And if you want inflation to come down, vote for the person that didn't do that.
So as the baseline, Steve, with the polls, we expect, just like the RNC got a bump for Trump, that faded pretty quickly. DNC obviously getting a bump for Kamala. Where do we stand right now? And then I'm going to, put your feet to the fire. You have to call the election today. Where does it go?
Well, I may take issue with the decline in the bump. I mean, Trump's support has been remarkably stable. It's about 47%, 46%, 47% in terms of the average. I think to your point, the bump got pulled forward a little bit after the assassination. I think Harris's bump, I'm assuming, has been pulled forward a little bit. And right now she's about 3%, I believe, in the Real Clear Politics average of polls. And if that sounds familiar, that's about where Hillary Clinton was in October. And most believe that you probably have to have 3.5% to 4% if you're on the Democrat side in the national polls to have a chance at winning the Electoral College. One thing I'm sort of watching, now we're recording this Friday morning, it looks like RFK Jr. is not only expected to announce he's dropping out of the race, but that he might actually endorse Donald Trump, which I would sort of assume that would likely happen, just given that Democrats have been trying to keep him off the ballot for all this time. But look, his support has come down. I mean, I think in October of last year, it was like 25% in some polls. I think now it's about 4%. But you get into margins matter in these close contests. We're talking tens of thousands of votes that could swing a consequential battleground state. So him getting out.
Let me ask you a question. Where is he strongest, right? Does he have, a ton of pull in Massachusetts, which doesn't really matter, or does he have a ton of pull in the blue wall states, Michigan, Ohio, Wisconsin, Pennsylvania?
I would say it's less about the number, but more about the impact in the states that matter. And so when you get into that 3 or 4% in Pennsylvania, some of these 5-way polls and the like, and before he was pulling more support away from Biden, which sort of I think intuitively makes sense. You had a lot of disaffected Democrats just about his age, frustration over how he's governed. And then when Biden exited the race, Harris has done a better job of sort of bringing those disaffected Democrats back on board. So at this point, he's been pulling more support away from Trump in most polls in most states. Occasionally, you see some outliers. I just want to caveat that. So, which is why I'm assuming if he gets out and endorses Trump, if that leads to a 1 to 2% bump for Trump in Pennsylvania and Georgia in particular, then that's probably enough because you're still going to have a few third-party candidates, Cornel West, Jill Stein. They're going to pull exclusively from Harris. Not much, but we're talking again about the presidential election coming down to, I would say, Pennsylvania and Georgia. If Trump wins those two states, presumably he's going to carry everything that he won in 2020. He's right at 270.
Yeah.
So if you give me today to handicap it, I would still probably say Trump barely, like 52-48 to Harris, just because of what I think the RFK momentum could mean in terms of getting out. You've seen some movement here actually in the betting markets now that they're tied, whereas Harris sort of had a 4 or 5 point advantage prior to the news sort of coming out yesterday. But again, we'll see what happens.
Does RFK get a cabinet position?
Well, there's rumors that he wanted to become attorney general like his dad. I'm not sure if Trump's going to give him that. And I guess the counter to that is who else would want the job under
Right.
Trump?
That's what I was going to say.
So I don't know how much competition there is for that.
Right.
So that will be something to watch where there's going to be a czar. And then if he gets in, there's sort of this like ideological alignment between Trump and RFK Jr. to quote unquote blow the roof off the deep state, sort of revealing some interesting things with respect to the assassination of his father and his uncle and UFOs. So as a consumer of conspiracy theories, I would be excited just to see where it leads.
It'll be like a Netflix special. It'll be fantastic.
Yeah.
And I was thinking about this. This is very esoteric, and I'm sure maybe Neil will remember. But when in '08, after the election, the rumor was, this is, keep in mind, like, forget fire and frying pan. I mean, we're in the depths of hell at the time. It was late '08, so Lehman had collapsed, etc. And the announcement was they were going to name now I'm drawing a blank on his name, the New York Fed
Geithner,
chief. Say it.
was it Geithner?
Yes, Geithner. Thank you. Geez. They're going to name him as Treasury Secretary, right? And the market just absolutely loved it. So, is there something to that here? Do you start naming, Jamie Dimon? Do you start naming, like, or at least putting it out there so people are like, wow, these are, real people? And I mean both sides, right? Like, there are certain people that if you put certain people in those positions would say, hey, like, I trust them on this issue that's important, right?
Maybe. I guess where I'm sort of concerned is I think that probably appealed to the Wall Street crowd and the markets reacted favorably to it. I think most of them probably aren't what I would classify as undecided voters in the swing states that matter, which is why I'm sort of like questioning what the political benefit might be. I think one thing to watch moving forward if Harris wins is what does it mean for the existing cabinet officials? Because if she does have a Republican Senate, like Neil alluded to, and I think there's probably a good chance that she will, given that West Virginia is expected to flip. So that means we're at 50-50. John Tester, the senator from Montana, it's a Democrat, is trailing in the Real Clear Politics average of polls, which means you're looking at a floor, presumably of 51 Republican Senate seats, is who can Harris get confirmed with the Republican Senate? And if that becomes an obstacle, is there pressure for some of the existing Biden people to try to stay on? There's some precedent with that going back to when George H.W. Bush took over from Reagan. I know he left the Treasury Secretary in place and a few other folks as well. So you don't need to be reconfirmed if you're already in the role. And I don't know that the Harris campaign has been well, they haven't been willing to answer questions on anything. But in terms of articulating, what's going to happen to existing cabinet officials versus that, and they may doing that deliberately just because it may depend on how the Senate goes. Although I will point people to a Wall Street Journal article today that actually suggested some people that may be in line for positions under potential Harris administration.
Yeah, it seems to me like it's a good idea just to kind of surround yourself with people that are in the know, and you say, hey, look, this is kind of it's almost like the draft, right? Like, this is a good team that's coming together here, and I'm a preseason favorite. I'll move that way.
If you're that person, though, in terms
Yeah,
of upside versus the downside, let's use Jamie Dimon as an
I'm that person. I'm that person.
If he goes into say, look, I'm willing to be Trump's Treasury Secretary, obviously that's going to make it very difficult in his current role as CEO of JP Morgan. If he does that now, and if Trump loses,
And he gets all his stock cash free.
Well,
Unveil.
I see him why he would want to come in and
Jack.
serve under Trump. I mean, I don't know that everybody always appreciates that. As some people might remember, I was part of the appointments team, so I do have some familiarity with this. And to your point, Jeff, that is a big driver for a lot of these people with outstanding stock options is to come in and serve, is because they're able to vest them immediately without the tax penalty. Because I think the intent of the law is you don't want to be presiding over policy when you have a financial interest. I get the intent, but as usual, the intent of the law versus the practical nature don't really align.
Right. Talk about
Why
golden parachute.
I don't think you're gonna have any issue getting people from the private sector to serve.
Yeah. Well, that's a good heads up there. Neil, let's get right into it. There we have Jackson Hole, which is coming up. We're recording this Friday morning, so we're right before this Jackson Hole speech. But let's talk a little bit about the jobs data in this revision. There's talk about a good conspiracy theory. There are plenty out there who think that this is all about padding the numbers and making things look better. Give us your take on it. And, this is not something new, by the way. It's just something more extreme than what we've seen historically. So what happened there with the data?
If they're trying to, if they're trying to help, who are they trying to help, right? I mean, they're releasing it the week of the DNC. So if it's a conspiracy theory, who are they? They're doing an awfully bad job. It's very interesting. The people that are cooking the books are also the ones going back and trying to fix the books. So,
Right.
Not that internal consistency is the strong suit of the conspiracy theorists. I mean, that being said, I think that for me, there are a couple of takeaways, a few takeaways with this downward revision. First, it was a lot in percentage terms. Obviously, we have a lot more people working. So, jobs got revised down by 800,000. So the benchmark revision process, it happens all the time. I think for me, it doesn't really change the overall story that much. But I think for the Fed, what's important is that they, of course, were using this data earlier in the year as a rationale to push off rate cuts. And so obviously the data now looks to be somewhat weaker than it was originally. I think the number's like around 170,000 on average over the first few months of the year. It was much stronger than that initially reported. So, I think that's notable. But if the Fed wanted to be internally consistent, they have to say, well, look, this data that we used as a crutch to not cut or push off the timing of cuts earlier, it didn't do what we thought it did. So maybe that means that we should, try to be somewhat looser now. Alternatively, it also tells me that whatever the jobs numbers are at the moment, whatever they're published at, it's probably lower in reality, right? Because of these downward revisions. There's just less momentum under the labor market. And so, revisions tend to be cyclical, right? So they tend to reinforce the existing kind of direction of travel in the data. And so, that's sort of how I'm thinking about it. And I also think it's a reminder of why the unemployment rate is so useful to look at. It's like, look at these ratios. Those, the unemployment rate is very minimally revised for that reason. It's population adjustments and things like that usually, but that's why looking at the ratio of unemployment rate, employment to population ratio, it's important to look at those things. And those tell a pretty simple tale. The employment rate, the prime age employment rate has basically been flat for the last year, and the unemployment rate's generally been going up. So that tells you that the labor markets have been cooling. And so, this revision data was just a reminder of that.
And where does that put the Fed? Do they now look like they've been out of touch and certainly later to the party than they should be? And with that, will they, in your view, make it up sooner, or are we still on the same?
Well, that remains to be seen. We just had a quick conversation about the jobs numbers and how they're revised and how they've been revised a lot. And yet, if you ask me what's going to be the determining factor between whether they go 25 or 50, it's the next jobs number, which is probably going to get revised down. It just shows you how silly the process is for the first move. I do think what'll be important isn't so much whether the Fed goes 25 or 50, but what they signal after that. And I do think, one of the things I've heard so far in Jackson Hole, we haven't heard Powell speak yet, but one of the things I have heard is this word gradual. We can move at a gradual pace. And to me, that sounds a lot like the measured approach language that Greenspan employed in the 2000s. And we recall that when measured was basically it just basically locked everything into a 25 basis point move, in terms of hikes. And gradual sounds like 25 basis point moves in terms of cuts. And I do think that's a risk, because if all you're doing, and this is something you mentioned, the 2-year yield to Fed funds rate spread, right? There's one of two ways that spread can kind of get back on sides. Either the Fed cuts aggressively, or the data turns and that pushes 2-year yields higher. I don't think that's likely, because I do think that the data probably gets a little bit worse before it gets better. But if all the Fed is doing is stringing out a bunch of 25s, if you think about the cadence of FOMC meetings, it could be a while before we get to neutral. And in the process, you're still above neutral. And if that's the case, you're just unnecessarily putting risk onto the economy, downside risk. So I think it's important not to kind of lock yourself in to some kind of preset path, and keep your options open, particularly at a time when the balance of risks have shifted.
And what do you think the most important data point is between here and the next FOMC? And I'm gonna make it harder, because I'm gonna take payrolls out of that. That's always, right up there. What's the next most important data point?
Well, I mean, the Fed meets, I think, on September 18th.
Yeah.
And we do get, we get ISM, but I think the CPI and PPI numbers on the 11th and 12th will be important. We'll see whether the momentum in the inflation numbers continue. I mean, obviously, we know headline inflation will probably be somewhat softer, because if you look at retail gasoline prices, they've been declining.
Yeah.
So, that's probably going to weigh on headline.
And with that, the dollar, right? So we've seen gold break out. The gold chart, I have to say, of, kind of all the charts we go through and look at, is one of the better looking charts that's out there right now. My concern, and we'll talk about this a little bit, is we've certainly seen a change in the characteristics of this market, right? If you go back to the last part of June, early part of July, tech was still dominant. It was frothy, no doubt about it. And it was good times ahead. This last rally, after we had the crisis around the concerns with the yen, which, by the way, have not gone away. The yen has not collapsed back into trend. It's just kind of consolidated. So I think that's this nagging ankle sprain, if you will, that's still out there and might flare up on us. But when we look at the characteristics of this market, it's been lower beta, it's been REITs leading, utilities leading, tech actually underperforming, yields not rallying or bouncing with the market. So again, this kind of characteristic change. The number of 20-day highs, even though the equal weight index has actually gone on to make a new high, we didn't quite do that with the S&P, but we're right there. But the percentage of 20-day highs is at 18%. That's not a really robust number. It's an okay number, but it's certainly not something that we would say, hey, this is, we're right back in it. This is great. And the market is reaccelerating. That's not what we're seeing. I think probably the best thing, and you hit on that spread. That spread is important because it just tells you, how removed the market is from policy rate, right? One is a mandate. Talk about price controls. It's a price control for money, no doubt about it. And the other is a market rate. And when those two things are different, then you either have restrictive or ample policy, and better or worse times ahead usually. But the one thing that gives me some hope here, that it's not all dire and that we're still in this, what do you call it? Landing, that you touch down and you make it to the gate, is that this looks like it's a slowdown. It looks like it's an income growth slowdown versus a balance sheet slowdown. And what's the difference there? One's top line. One is the robustness of the top line growth is less than it was, say, a year ago or even 2 years ago. And so there's this readjustment period to weaker aggregate demand. And that's like, typical. That is your 80% of the time, maybe higher, 90% of the time. That's kind of what happens within the business cycle. The other is a balance sheet recession. And those are more impactful because you're taking and impairing the value of assets. Well, why is that important? Because when you impair the value of assets, that means your defaults go up. That means the leverage in the system tends to get cleansed out. And that makes the the economic contraction far worse because you're kind of pro-cyclical at that point. We're not seeing that. And where we're not seeing that are in spreads, double B versus triple B spreads versus treasuries are still okay. Financials, which are obviously, the most highly levered within the economy and have the biggest impact on those things, those are not deteriorating in a meaningful fashion. While the SPACs and some of these things that are at the margin for liquidity are not performing well, they're also, not on fire either. So I think this is that line between, do we actually have a soft landing or do we hit a little harder? And the good news is it does not look like a balance sheet recession. Those are the ones that get nasty in a hurry. Neil, what do we have next week in terms of data?
I think for me, what I'll be paying close attention to is the Conference Board confidence data. I look at it because of the labor differential, and that's sort of assessing consumer attitudes about the job market. And consumers have generally been sort of signaling that the labor markets have cooled. We'll also get data on, the core PCE deflator. The markets are looking for 0.2%. We had a soft 0.2% in the core CPI. I wouldn't be surprised to see, maybe core PCE comes in 0.1%. So there might be some downside risk to the consensus. But those are really the two pieces of information that I'll be keeping an eye on for next week.
And Steve, you're on vacation, but what's going to be important for you next week?
Well, getting to South Carolina, an 8-hour car ride with a 1 and 3-year-old is going to be what's really important for me.
Good luck. Sold to you, as they say in this business.
Exactly. But I think two things sort of touched on, but I'll just reiterate, is this Kamala Harris interview. Presumably that's going to happen. And just seeing how she does. I mean, one of the reasons she hasn't done a lot of interviews is, you may recall, she did one with Lester Holt from NBC. Just simply asked her why she hadn't been at the border, and she didn't really have a coherent answer for that. And that sort of dogged her ever since. So don't assume that she might not flub this. And then we'll see, assuming the RFK endorsement of Trump does in fact happen, that will it lead to some movement maybe in favor of Trump in those crucial battleground states, particularly Georgia and Pennsylvania. That's sort of what I'd keep an eye on next week.
Is there I guess moderator is wrong word, an interviewer that has been chosen, or even a network that's been chosen for this interview?
Not that I know of, but as Neil suggested earlier, which I would agree with, you can count on it being a sympathetic outlet.
So you think it's Elon Musk and Twitter?
No, my guess is it wouldn't surprise me if you see some sort of 60 Minutes interview, or probably on ABC with George Stephanopoulos, who was Bill Clinton's press secretary.
Right. Yes. Complicit in charge. Well, in terms of the overall S&P, we're still in an uptrend. The old high 5670 is the resistance level. The 50-day, which is ascending, 5483, and the 200-day, which is also ascending, 5091, should hold on to any of those consolidations. The 10-year yield, really probably the crux of this thing right here, along with the twos, but 403 is resistance. Little surprised we haven't been able to get through this with that equity rally, so I do think that there's a message there. Support at 380, which we've been bouncing around, and we've never really been able to clear that meaningfully. The reason that's important, and this is very qualitative, is we've been in this camp on the technical side here that under 380 and you really do start risking something that's more of a hard landing. So I do think that that 380 ends up being important. The next level below that, and why it's important, is 325. So that's a pretty big jump between here and there. Obviously, would affect mortgages and everything else. That level 325, by the way, takes us back to the aftermath of Silicon Valley Bank and First Republic back in April of 23. That's when we got the low. Obviously, that all took place in March, but gives you some reference point of what what the circumstances were, what the narrative was that drove rates down to that point. Well, join us again next week. We'll be 1 week older, 1 week wiser. Don't forget to follow us on Twitter. And if you want deeper insights, RenMac Access. That's renmacaccess.com. Until then, I'm Jeff DeGraff.
I'm Neil Dutta.
And I'm Steve Pallett.
We'll see you.